Okay, recording this video on Saturday, the 3rd of October 2020. It's just gone 5:52 a.m. Chicago time, just gone midday here in France. Do hope you are doing well. The weather today is pretty ugly. We had a heck of a storm roll through Biarritz last night, and I think today everybody's kind of hunkering down because it's not pretty outside. But I'm looking forward to next week because after big storms like this kind of roll through, we usually get some pretty good swell and some good waves. So let's see if that happens on Tuesday or Wednesday. Anyway, I want to talk about a couple of charts this weekend. Crude oil that I've not talked about for a very long time, and coffee. I kind of keep on coming back to coffee from time to time this year because it's kind of looking interesting down at psychologically important levels, about $100 on coffee. But anyway, crude oil. So usual setup, I'm going to roll through both daily charts, kind of weekly charts, and tick bar charts for some of these markets. It's my usual setup. Two charts side by side. On the right-hand side, everything to do with price. On the left-hand side, everything to do with volume. This is at CL, which is a continuous contract, day and night session of crude oil. On the right-hand side, we've got beta sine wave kind of down below the price bars here, and that's calculating cycles in 3 different time frames, which allows us to put support and resistance lines on the price bars themselves. The thick lines here are support and resistance in the highest time frame. The little thin lines are the lowest time frame, and so on. So when we get breaks of support and resistance, that shows us uptrends and downtrends, and then uptrends are painted in red, downtrends painted in white. And then on the left-hand side, everything to do with volume. We've got better momentum down below the price bars here. That's a volume-based momentum indicator. And then on the price bars themselves, we've got professional and amateur activity marked. And we calculate average trade size from which we can deduce whether we have professional activity or amateur activity. Professionals are in blue, amateurs are in yellow. Then when both of these kind of trending systems, both price and volume, are in the same direction, uptrends are painted in the background as red, and downtrends are painted in grey. So back May time, back here we bottomed out in crude. Huge exhaustion selling signals, blue professional bars kind of come in. This is when we were talking about negative oil prices printing for a day and a half, and we've kind of bounced from there. So the low, single digits up to 43, 44, kind of up here. And the turn as we roll over in crude, I have found very difficult to time, because it's been a whole bunch of pushing up with amateur up bars. You can see here, each time pushing into these highs, amateur up bars, and we just can't get going. So we briefly trigger into some strength here as we're breaking resistances, but then we roll over below supports into a downtrend here. Now, on the daily chart on crude, we have triple resistance going on here, and they're tight together. So we get big moves come from triples, either breaks of those into an uptrend or continuation of the trend kind of into a downtrend. So because we've got a triple going on here, we've got a potentially big move kind of setting up. They're all around the 41 to 44 kind of level at this point, and at the moment what we've done is just printed a little bit of a double bottom-ish type of activity with Friday's activity. Whether we slice through that and kind of keep on going, I don't know, or whether we're going to have a bounce Monday, Tuesday, and then kind of fall down from there. But professionals have not kind of picked it up, and we've got to see this thing through. So, once these things plot resistances or supports on the highest time frame, and we start moving, trending in that general direction, they have to play out. So that resistance has to play out to support wherever this kind of comes down to. So, and what I'd be looking for, and when this whole thing is over, is more blue professional down bar, and some kind of bullish divergence pattern here. It's probably going to come with some ugly volume as well on this downside, but it'll be a question of kind of timing that move down. So that's the daily chart on crude. So now we've got ourselves a downtrend. We've got to kind of pick our entries to get into this. With the tick bar chart, I use a 35,000 tick bar chart of crude. Gives me roughly 9 bars per trading day, which is a nice kind of time frame to be kind of going down. The problem with the 35,000 tick bar chart is it's a very big tick bar chart. So there's a lot of kind of data and computational kind of intensity on a 35,000 tick bar chart. It's actually the largest tick bar chart I use on all the markets. And frankly, it's not particularly practical. I don't open this chart up and have it running during the day session. I just look at it kind of at night or on the weekends. A better chart to be tracking, tip bar chart for those bigger term kind of moves, is maybe a 15,000 tip bar chart rather than 35. But just to warn you that 35 is pretty data intensive, takes a little bit of time to kind of open up, and sometimes it causes some problems with kind of looking for data from the TradeStation kind of data servers. So just bear that in mind. It's not ideal, but does show us what's going on here. So you can see we topped out 43, 44, a whole bunch of blue professional bars kind of come in here, and then as soon as we got that weakness breaking through 42, bang, these blue professional bars kind of selling it down. We broke through supports on the lowest and the intermediate time frame. We can see that weakness there and just bounced off a pullback to end of trend. But what we've seen over the last couple of days is this exhaustion sell is this swing here. And that's just getting the move going. We've not seen an exhaustion sell kind of ending the move. And we've not seen any blue professional bars kind of down at the lows. All we did with this retrace, and that was a really nice little entry there into what I call a dark signal here, where the trending systems kind of briefly don't align, and we got a little bit of a dark background there because we come out of that downtrend into a little retracement signal. Came back right into those blue professional bars where the professionals kind of sold it down, and bang, under the lip here, which I talk about, that kind of resistance on the better pro-am indicator, under the lip, and we kind of sell down. So we've got a little bit of a double bottom, kind of people maybe hunting for that, but on the downside, no exhaustion sell, no blue professional bars, and we've got to catch up and find a support in the highest time frame and kind of trade this thing down. So I don't know where it's going to go, whether we're going to get a bounce on Monday from this, but I would look for weakness kind of continued through 36, 37 at some point until we get those exhaustion signals to kind of end this little bit of the leg at least. So there you go, crude. Haven't been able to kind of time a decent entry. That was the best one at 41.42, but wasn't particularly looking at it because I was covering a whole bunch of other markets. At some point, this is going to be good for a nice kind of continuation of the swing down. All right, then coffee. Now, coffee, I'm pretty interested in a lot of the ag kind of commodities. I've shown you this chart a couple of times. It's DBA, which is the largest ETF that covers all of the agricultural futures commodities. And this thing has been pretty uninteresting for some years. Let me just show you this on a weekly chart. You can see here, DBA has been in a massive downtrend from peaking 0708 at 45 bucks here, trending back down to, I don't know what we came into, tens and so on. Yeah, it's not as if we've seen a classic kind of exhaustion sell signal kind of down there, but we have a lot more professional activity kind of going on at the moment than we've seen. And we're in the process of bottoming with a whole bunch of ag commodities, and it's a question of timing the entries to those. I think this bottoming process in ag is going to be messy, and this coffee chart I'm going to show you is particularly messy, but they'll start to line up and we'll get some kind of nice ag trending moves over the next couple of years, and there's a few of those that I think it's worth kind of getting on board. Whether this is the right time for that, I don't know. I think we have a swing potentially in coffee, but whether this is the low in coffee, I don't know. So you can see here all these blue professional bars kind of came in with exhaustion sell, and then all the blue professional bars buying that initial kind of breakout. Because it's continued and we've had all these blue professional bars kind of come in here and we've had a decent move, some of that is profit taking potentially with exhaustion buy and bearish divergence, and that's why we've kind of sold off a little bit. But it's a whole process of kind of bottoming, and this is almost like the first kind of swing at this. I think we might come back down and test it, but ag in general I'm interested in. On the sine wave, better sine wave kind of price indicators, a big pullback to end of trend move here. Nice little pullback to end of trend on the lowest time frame, kind of cycling in there with that exhaustion sell bullish divergence, and then signaled this kind of breakout above 14 a few weeks ago that was looking interesting. So DBA and ag in general, I think, is going to be a nice area to kind of play in for the next few years for some potentially super big moves. But coffee. So I've had a couple of bites of the coffee trade during this year, and they are really kind of short and sharp. with these kind of rallies. You can see on a daily chart, this thing is all over the show, down from 100 all the way up to 150 bucks. $100 on coffee is super psychologically kind of important. And I wouldn't say necessarily, you know, we have everything in terms of a classic kind of setup for coffee here, because we've not got exhaustion sell. We don't necessarily have blue professional bars kind of coming down here, but there's a lot of kind of toing and froing for some super big moves in coffee. I do think the weekly chart is a little bit more interesting. You can see that, bang. And here you can see this thing's been in a downtrend since 2010, 2011, where we topped out at over $400 for coffee. So on the downside, you know, here we do have blue professional bars, exhaustion sell kind of coming in a couple of years ago, but you know, we sold off each of these rallies. We sold off with blue professional bars when they rallied back up. This last little move here was playing off the Rambo pattern. So at $100, all the amateurs were getting short at that point. No, they got wrong-footed and got pushed back up to $140 there. But we're coming back down to that 100, 105 kind of level, kind of back down here, and I think that's kind of interesting at least. So the downtrend has got, you know, pullback to end of trend on the left shoulder here, that little pattern there. Let me show you that, bang. And then we got just put in a pullback to end of trend on the intermediate time frame, and had the first sign of strength that we've had since 2016 on this, with a break above resistance, and we've come back down. So it's an area where we might find some interest to kind of pick it up for another kind of move in coffee. When you back it down to the tick bar chart, this tick bar chart is a 1500 tick bar chart. Again, roughly gives you 9 bars per trading day here. And you can see this last kind of swing down. We maxed out with blue professional bars, kind of selling it down. We'll pull back to end of trends, the end of that uptrend here. We've been in this nasty downtrend kind of going on. But with Friday's activity, a couple of things happened. So first of all, blue professional bars came in at 105, kind of down here. What was the absolute low? 104.90, psychologically an important kind of area, because $100 was really important the last time. I think we bottomed out at 97 or something. But anyway, so that's the first little spike down. Blue professional bar kind of came in and we rallied from there. And we had a pullback to end of trend on the lowest time frame with 2 cyclical turns after that. And often these look like really good kind of entry points if everything kind of works together. We haven't had an exhaustion sell necessarily here on coffee. This was getting the move going. I don't think this was in the right place, this second one here, to bottom the move necessarily, but we've kind of got weaker selling kind of going on. And we certainly haven't turned into an uptrend. So we need to get on better pro-am above 112.75 to show strength here. And we've got to get above some resistances on the better sine wave indicator. And we possibly have to put in some more resistance and supports on the intermediate time frame. So it's not gone off yet, but with that activity on Friday, that blue professional bar, that kind of cyclical pattern down there, that started to look interesting for me. And at 105, psychologically, it's a really kind of it's back in the game. It's an area where we might see another kind of swing move kind of take off from. So I'll be looking at that over the next couple of days, coffee, and then trying to get a decent entry on crude. So next kind of rally back, a week rally or something like that, to kind of short on crude, because this thing's got to play itself out from resistance to support on the daily chart. Anyway, so there we go. Coffee and crude. So enjoy your weekend. I might put out a video tomorrow, Sunday, talking about the Forex markets and dollar index and gold, because that's kind of setting up for something in the next week or so. Anyway, hope your trading is going well and enjoy your weekend.